All right, guys, good morning. Excuse me, good morning, good morning. Welcome aboard to our morning note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is Friday, September 4th, 2022. Before we begin, bottom right-hand corner of your screen, little white logo, click on that, turn notifications, subscribe to our channel, like our videos. Really do appreciate it, as always. Let's get right to it. The Dow futures are down 189 points. NASDAQ's down about 0.75%. Even with the Amazon beat yesterday in regards to the price action. S&P down 0.60%. The Russell's down 1% this morning. Crude oil, again, still chugging along to that $100 level per barrel, up nearly 2%, 92.02. Gasoline, $2.67, up 1%, highest since 2014. Gold futures down 0.60% at $17.93. Silver futures 22.12, down 1.05%. Euro dollar down 6 pips, 114.31, and the dollar yen 115.33 at up 34 pips. Okay, and the VIX is up 7.23% at 26.11. I have that on my screen. The dollar index is up about a quarter point, 95.61, and the 10-year yield 1.909, up 4.65% in terms of the yield. Okay, let's go ahead and talk about it. So we had our jobs report, non-farm payroll report, that came out. 467,000 jobs added versus 125,000 jobs expected. Unemployment rate 4% versus 3.9% estimate. So you're probably saying to yourself, well, Carlos, that's great news. More people have jobs, right? Well, not as simple as that. So what I was hoping for, if you're a bull, was that jobs number came in less than expected. The fact that we have more jobs added takes away the labor pool in terms of people looking for work, and then the companies that are trying to hire them. Those that are trying to hire them have to pay more money to get those talented workers or skilled workers. Again, if the labor pool tightens, supply and demand as always. So again, wage pressures go up. That's why the Fed has to raise rates quicker. Again, this is why it's pricing in the 10-year yield at 1.9%. This is why the futures are down initially, just for the fact that this jobs number would give kind of a incentive for the Fed, let's just say, or a mandate to raise 50 basis points in March, which is not confirmed because we don't know, but we're pretty sure, 99.9% sure they will raise in March. But is it 50 basis points or 25 basis points? So what does that matter in the grand scheme of things? Well, a couple things here. Now we're just retesting the breakout from Jan 31st, basically a round trip from Monday's level to today's level. So again, we're basically getting to flat for the week, which is pretty funny. But again, if you took advantage, trading options, call options, you're pretty much having a good week so far. If you're an investor, depending on what you invested in, you're having a decent week. So again, all we are doing is round tripping right here on the retest of the breakout on January 31st. And again, now we're testing the 200-day moving average on the hourly. That's on S&P futures. On the NASDAQ, you can see exactly we're retesting the breakout again, kind of slightly below it, 14,368. That's the level to hold right now. Let's see if we hold it. But we did break down below the 200. So again, NASDAQ is showing weakness, even though a big part of it, Amazon, is actually up after hours, nearly $300. The VIX, getting really close to a cross between the 200-day and the 100-day on the 1 hour. You could see slight resistance on the 200-day since the 1st of February. So again, this is not a tradable security, obviously just a chart to look at. If we go and bring up the daily on the VIX, you can see again spikes and falls. Again, we talked about reversion to the mean. We talked about right around 22 to 18 seems to be that number where the VIX kind of settles. But we get spikes here and there, whether it's a 35, a 30, 28 or something like that. We usually get some spikes here and there. But again, you can see the reversion to the mean right around that 20 to 18 level. That's where we usually kind of stay at. So again, that's where VIX comes in. That's what we're watching today. In terms of 10-year yields, 1957 is your resistance. The question is, do we tap it or do we reject it? So again, let's take a look at the weekly chart, 3-year weekly chart, and you can see 1957 is your resistance. Right now we're at 1901. The question is, do we break above that? Again, down the line we will, but the question is, do we get it short term? Again, watch the banks if for any kind of break to the upside. So again, you can see Goldman Sachs is up pre-market. yields going up, right? Let's take a look at Citi. Citi's up pre-market. JPM up pre-market. So again, Morgan Stanley up pre-market. Let's take a look at Wells Fargo. So there is opportunity out there. Wells Fargo even moving up. So again, take a look at yields. The question is, if you're playing banks, again, watch the banks and TNX, which is their 10-year yield. If we break above it, banks are going to soar. Tech is going to take a little bit of a hit. Again, tech doesn't like higher rates because they borrow more. And again, the banks make money off the spread from what they loan and what they borrow. Higher rates means more income for them, gives them an opportunity to jack up rates because the 10-year yield, which they base their loans on, is going higher. So again, there is opportunity there for those who are looking to trade to some upside calls on some financials, and possibly those who want to go ahead and short some tech. Who are some candidates for shorting tech? Well, I can give you one of them, but it's going to be expensive. It's Amazon. Amazon's numbers were fine, but not amazing. But again, keep in mind, Amazon trading at 38.86 really hasn't done anything for 2 years. And I've been saying that for a while now. Again, you can see we've been kind of stuck in a range since around May of 2020. And not much has happened since there. We've been stuck between 33.41 and around 29.30. Again, I bought the dip below that. So again, I am up on that buy. But for the most part, we've been kind of stuck. So again, Amazon in a way, again, there were some great things about the quarter. There were some things that were kind of about the quarter. I would say looking at Amazon, it was a decent quarter. The bright spot was the cloud year-over-year growth. That's 40% in a segment, 40% up year-over-year on cloud, AWS, in a very, very competitive market. You have Azure, which is Microsoft. You have Salesforce.com. You have Oracle. You have also Google. So you can remember the other names that did well. Microsoft had a great quarter. Google had a great quarter. Amazon had a great quarter. Another bright spot, Amazon's advertising business is actually outpacing YouTube in terms of revenue. So Amazon has some stuff going for them. In terms of e-commerce, it was up 1% year over year. But the Rivian investment, a company that has yet to make a car, that's where they made a lot of their income. So again, a lot of traders are looking at that today and saying, why did it go up? So what you had yesterday, and this is where you can see in Pinterest, you can see in Snapchat. What you had today or yesterday was a negative gamma event. So you had a lot of people on the opposite side of the trade to the point where just a little bit of good news, traders are dumping those shorts and going long. And what happens? You get a squeeze to the upside. And again, a lot of people were offsides. A lot of people were looking at a Pinterest for a short, Snapchat for a short after Facebook's numbers missed. So Facebook being the biggest loser, you could see how Snapchat did. And Snapchat had a good quarter. It's not like they didn't. They had a profitable quarter for the first time. So again, some good numbers. Obviously, Pinterest was up as high as 32, and then it came back down to 26. Still a good rebound for Pinterest, but on a daily chart, we're at 26.21. Take a look at 2 years. You're still in the lower end of the range. All we did is really fill that downward gap on the July's 2020 level. So again, a lot of the COVID gaps are filling for all these big high beta names. Again, that's what just watching. Watch your technical analysis, watch your charts. There is opportunities out there. For example, opportunity in PayPal. Right at 120, we should bounce and fill that gap on the daily. So again, I'm possibly taking a look at some calls for next week. Facebook as well. Again, another gap that was filled from 2020. Again, opportunities out there. Would I call this a day of wanting to go in and rush and buy everything? No. I think today should be more of an observe and record type day. Is there anything to buy today, Carlos? Is there anything I should do? Really, for the most part, no. The only thing that I bought was yesterday. I bought some SPY-G. Again, I buy that every week. Other than that, not much else to talk about. Bitcoin was up earlier today until we had that report on the jobs. We hit 38,000 on Bitcoin. Now we're trading at 37,436. Taking a look at it here on the hourly chart. Again, a nice little bounce after that initial jobs number. So again, even good news can be bad news sometimes. And sometimes bad news can be good news. So there you go. That's what I'm watching today. Again, we're still holding that support. So again, if we break down, again, puts will be in order, yes. If we hold up, then it's really not much going on. You just have to wait until you get a little higher, around 45.11, around 14,750 on the NASDAQ. But until then, I would not do much today. I would pretty much a sit on your hands day unless you're looking to go short, and that's a short-term play. And if it does, then you have to be cognizant of the fact that there may be some opportunities from some stocks that you did want to buy. A break of 231.89 for me on Facebook. If we hold those levels, I will be buying more today. Definitely looking for some more upside down the line. I think Facebook is fine. Again, just has kind of that scarlet letter of all the crap that's been going on. Now it's metaverse. Again, it's a big investment. I like the future for Facebook. Absolutely. Let's go and take some questions. Morning, Carlos. Thoughts on Apple calls for today? Okay, so Apple calls for today. Again, you're talking about expiring today. That's a very tough one to do. So be very careful. If you're looking for calls, again, gun to your head, looking for calls, it would have to be the 172.50s. I would not recommend it. Again, we're starting to bounce slightly, but again, 172.50 would probably be the best target to look for if you're looking at it. Let's take a look at some pre-market movers together this morning. Let's see if I can get it here. Let's see it. So Snapchat up 43% pre-market. There you go. Metaverse down 2.43%. Apple down 1.21%. Let's take a look at the Dow. What's moving? JP Morgan's up pre-market 0.49%. Chevron up 0.67%. Microsoft down about 1%. Intel down about 1%. Cisco down about 1%. Again, we talked about yields. Yields don't really affect Apple as much, but again, they're lumped into the Qs and they're lumped into NASDAQ. Ford Motor Company down 7.49%. Amazon up 12% after their earnings. Tesla showing a little bit of green. Nvidia down 0.63. AMD down 0.75. Again, AMD had an excellent quarter as well. And in the NASDAQ, Lucid Group up 0.71%. PayPal down about 0.72%. We're starting to get to the point of capitulation on a PayPal and a Facebook. And I'll be watching to see if I can go ahead and add some more shares this morning. Qs, how for the day, how is it looking? Let's take a look at the Qs. Sorry, I always go look for NASDAQ. Again, you can see that support here right around 347.89. That's what you're looking for. That's the retest of the breakout from January 28th. So again, if we break down below that, we'll be back in range of around 350 to around 340. So again, that's your next level down of the building. But right now, it seems to be we'll be holding that 349.87 support. Let's see what the price action dictates for the day. That's why I'm saying this is an observe and record kind of day. You're just watching for the most part because there's really not much to do here until you get some breaks. Calls or puts today. Again, just watching. Today, you're just watching and observing. There's not much to do out there today, especially I do not want to hold stuff over the weekend personally. So again, I'd rather just sit on my hands, observe, and record. Morning, Carlos. Price to add on Tesla, Square, and AMD. Let's take a look at Tesla. Tesla below 800, I'm a buyer. AMD below 100, I'm a buyer. And then Square, I have an alert at 88.33. Again, they still have earnings to come up. So again, it's a big difference. It's a big, big price. But again, there is a gap to fill to the downside, I believe, on Square. Let me see. Sometimes the alerts, there you go. You have a small gap right there, right at 90.62. A very small daily gap. But 88 should be around that level. That would be support, right? That was the initial breakout right here, 87, 81, 88 from June 2020. So again, you're starting to see a lot of these high growth, high beta names are just retracing their gap fill to the upside from May 2020. Again, that is a good place to possibly add some positions. Now, if you're the type of person that you were just losing your mind the past month from all these high beta volatility, you need an opportunity to get out, wait for a bounce on any kind of relief rally again, and get out. But again, I'm a net buyer. I'm a buyer of these high beta names. Again, I have a longer term view. Some do have a shorter term view. We're starting to get a bounce here a little bit here. Thoughts on Qualcomm? I own Qualcomm, love them. Had a great quarter as well. And you can see here, just retesting the 50-day moving average, kind of a flag formation here. I think we go a little higher, maybe for if we look at the hourly chart here. Again, got some consolidation here. As long as we stay above around 174, we should be okay. I think that we should get back to around 188 relatively soon on a Qualcomm. I would not buy calls on that yet. I just wait on it. I like AMD earnings, absolutely. Do I like Facebook? Yes, I will be adding today if we get below 231.89. Do you think in March when Feds actually implement the first fight, we'll drop worse than January? No, I don't think we'll drop worse than January because that's pretty much priced in. What we're watching for now is, do we get a 25 basis hike? Do we get a 50 basis hike? That's the key. We talked about that a couple of times. Do they rip the bandage and said, let's just do it, let's just go ahead and pick up the pieces later? Or are they going to slowly go back and forth? If they do a 25 basis point hike, I think the market goes up. I think of a 50 basis point hike, I think the market goes down, but not to January levels. Maybe a quick spike, but it'll get bid up really quickly. So that's pretty much what I'm seeing. So pretty much the name of the game today is just watching. Just watching. That's all you need to do. Look, the Nasdaq's about to go green. And again, that support is holding up. So again, it may get to the point that we're starting to get closer again to a too many bears on the sideline that are just piling into puts, thinking the worst is going to happen. What happens? You get off sides, and then you get this big short squeeze. And again, earnings was a nice catalyst. We'll see what we get. Do you expect the sell-off will continue even with next week with CPI data? Well, keep in mind, there's not a sell-off here. All we did was get back to Monday's level, so it's not a sell-off. I'd be careful with saying sell-off because that's not accurate. But even with CPI data, again, the question is, what's the CPI data? If the CPI data is better than expected, we're going to be more likely going to the 25 basis point camp. If it's higher than expected, we're going to start slowly going to the 50. The closer we get to the 50 basis point hike, the more volatility you're going to get. So again, softer inflationary data, again, you're going to start getting a little bit more of a stability in terms of the markets. Not in terms of a boom, but more of a stability. So again, even stability, not having these crazy winding spikes is a victory for the market in terms of just big moves to the upside. Again, Amazon going up 18% in a day is not sustainable for that kind of market cap. Facebook going down 25% is not sustainable on that kind of market cap. They will retrace back to the mean soon enough. So again, which is the opportunity? Are you more likely to sell Amazon, or are you more likely to buy Facebook? I'm more likely to buy Facebook instead. Are we going to continue this trend of chop through the year? No. We're not going to continue that trend of chop through the year. Absolutely not. Not in my opinion anyways. But again, it's just the beginning of February. Again, February, we tend to get the first 2 weeks in terms of seasonality, tends to be very well. Toward the end of February, we started kind of lowering a little bit. Beginning of March, a little lower. And then towards the second week of March, we spike up towards April. April tends to be very strong in terms of seasonality of the market. Adding Facebook, adding at 231. Yes, 231.89. I will be adding some Facebook. Yep. All right, guys, we'll go and leave it there. Have a great rest of your Friday. I'll catch you guys later for the aftermarket recap, see where we are, and go from there. Have a good one. We'll catch you then.